Good morning, students. Myself, I am Dr.M.Balasubramani from Commerce Department of Commerce CA, Assistant Professors of Economics. Today, we are going to discuss about the concept of the Indian economics within that given syllabus for especially in the national income. We seen a lot of discuss related to in the previous class for about the our Indian economics, a brief overview. In the continuations of today, it's one of the important topic. It's must know that being a commerce students, at least some little bit knowledge about the national income concept, especially in the calculations of national income. So, these are things with small introductions about this. Now, we move into the next step for that is the national income. Generally, national income means it is nothing but most of the peoples know that about the national income. It means that the income received from various ways we can calculate it into the total summations of the national incomes also same like that, but exact meanings is entirely differ for the national incomes. We are discussed one by one related for this concept in the detailed manner. So, first this concept introduced, it means the ideology persons, foremost American economist, Russian American economist, the Simon Kuznets. He is the very famous, he got Nobel laureate into the 1971, so especially notable persons. Okay, he is more contributions to economics. Okay, especially in the growth aspect, he given lot of importance related to growth aspect into the economics moving for that aspect. So, he set the standard for the national incomes accounting, enabling accurate estimate of gross national product to be calculated for the first time. He is a first number one person, he is the foremost person. So, he is ideological persons, he given the concept about the national income concept. Okay, Simon Kuznets. Then again following next in the Simon Kuznets back to the Bal Samuelson, he also one of the very foremost famous economist. He's also, he in front of us, he raised several questions about especially into the unemployment rate are increasing. Every years our unemployment rate are increasing, people are looking, searching for job, but he can't could able to a suitable job. So, unemployment rate are increasing, so prices are increasing means it is the inflations. Too much of money to facing the few goods, price are increasing continuously. Ordinary people using the commodities like petrol, diesel, grocery items, everything will continuously nowadays increasing, it's no doubt about it. So, he raised the question in front of us before know that detailed of the national income. So, poverty also another one of the important indicators of the calculations of, it's a battle, it's a very drawback of the calculations of the poverty. About this concept, I remember that students, you know that in the previous class we are talk about the poverty concept, we are already know that elaborately, but the poverty also the raising the poverty, it will direct or indirectly some things related to correlate to the national income, no doubt about it. Next one is the poverty needs. Suppose we are calculations of the national income, we know that about the concept of unemployment, price, poverty, fiscal policy, monetary policy, where we standing the fiscal policy. Fiscal policy means it is nothing but the expenditures and the income, public debt, these are the how managed into the government, and the monetary policy fully under control of the RBI control. Okay, then we are making the plan every 5-year plan, you know that planning concept, we are this plan, we are attaining this much level to that much level, so reducing the poverty, inequality. So we know that the growth rate from this level to that level, this percentage to that percentage, we are already know that. So why I am telling here now, so these are things must be considered before knowing the national income concept. Okay, so planning whether we obtaining our growth or not, that's the important for here. Okay, so obtained growth or not, comparing for the national incomes, everything's under which comes into the holistic approach for the national income. Okay, so national income, whenever we calculations of national income, we must consider under behind these are points are very important. So Ball Samuelson's arised in front of us. So these are the originated which will comes to national income concept. Next, what is national income? So income means it's nothing but sources from some other way. Here need getting receiving money so many ways, number of channels, but it will comes to our mind automatically. Our national income means in Tamil we can say that the Desiya Varumanam. So Desiya Varumanam, it's a Tamil. So national income means is the total amount of income occurring to a country from the economic activities in a year's time. So especially we are the developing India, know that our calculations of national income financial year from April 1 to March 31, from these are the financial year calculations. Same like that we are calculating method, we are following same financial years, a particular year, particular product during producing goods and services. All the goods and services is called for the national income. Generally national income, country incomes, government incomes and corporate income. So various ways we are receiving income. How do we calculate into the national incomes? Based upon the how government, how income from revenue from various ways, fines, fees, collections, tax, everything will comes to the income, government income aspect, that aspect, and countries and corporate incomes plus personal income also. So we can here also I note this point, government income and corporate income, plus additionally we know, you know that the personal remittance, personal income also we can calculate it. So these are the three important aspects to the calculations. So what I am trying to say that national income means it is nothing but a particular year during particular year producing commodity, goods and services in given period of time, that is called for a national income. I think I hope you that at least what is that much levels. Okay. So next in the continuations of these we must know that these are the three things. We have three methods, generally three methods we are calculating national incomes, not only for developed nation, developing nations, underdeveloping nations, these are three methods, generally methods. We can applicable into the developed countries or developing countries or underdeveloping countries or least developing countries, we can applicable. So generally these are three methods. So next first number here I am notably I am mentioning here the income method. So what do you mean by the income method? Generally America following the income method are most of the developed countries. Okay, so income method we can measure easily identified how much the income salaried persons per industrial sectors, agriculture sectors, service sectors, we can identify the calculations easily per individually calculations, income methods, by whether the government employee or the private employee or business, whatever it is, we can calculate into the easy income method. Under which category of the income method we can accountability easily, manageably, how much income you need per month. If you getting this month salary and you can multiply into the annual year, financial year. So generally developed nations following advanced nations, especially in the America, we are comparing the superior world superior country USA. USA, then only we can comparing to other countries. USA is a developed countries. Now we are the fast moving developing countries, one of the fast developing countries after the China. So we are comparing to the USA. Then why we USA comparing the developed, advanced, all the level of output, all the level of incomes, everything will be superior, will be advanced technologies having the America countries. Then only we are comparing for America. Same like that, America what method following? The method is the income method. Income easily we are identified, knowing there is no duplicate of developed countries. If you everything will be monitored for the personal or organizations or corporate, everything will be monitored. Easily we can trace out what is the income for monthly. We can averagely we can easily identified. So USA, Germany, Australia, Japan. So these are the G7 developed countries. France, Germany, these are the developed countries. Like our Indian mainly calculations for productions, and sometimes we are using the income method. So what is that here point is India where this positions, if you know that India productions method and sometimes using the income method, not for expenditures method. Expenditures method used, some of the countries are using, but not fully used the expenditures method. Whether it may be the productions, whether it may be the income. So both the methods are mainly majority of the countries are using. Our India especially the productions method, mainly following the production method, sometimes income method. If you government employee want to know that the employee salary, the income method. So India mainly calculations for the productions method. Income means individual income, all the income received the various sources. Generally income means various sources of the income personally receiving or getting income is called for the individual incomes. For example, just to look at one glance to that the example of the income method. So if suppose a government employee monthly salary 60 around he has getting the 60,000 of salary, generally one financial year. So one financial means, for example 2021, if you want to know that the income for the government employees, April 1 to March 31 is the financial year. So from this month to that month level, how much 12 month, how much totally we are summations of monthly 60,000 per monthly, but around the 60,000 into 12, around 7 lakhs 20,000 per persons, per government employees income only. So it is very easy, and counting is a possible, accountability is also the possibles. Okay, for example government employees, so you can apply into the various sectors, same agriculture sector, industrial sectors, service sectors, so you can apply. Government employees may be the service sectors, under which comes to the service sector, maybe we imagine. So we can apply into all the three sectors. So this is the income method. You know that. So income method means it's nothing but income received from various sources of various activities. They getting the monthly income means the income methods. For government employees 60,000, around the 7 lakhs 20,000 he getting annual years. This openly we know that there is no doubt about it. The income methods easily it's understandable. Okay, next I hope you saw that. But here I am noting point is India not only following the income method, productions method also following. Why? We reasons because okay. So if expenditures method, we can also the expenditures method. We must know that about the expenditures method. For example, you can suppose annual income 7,000, 20,000 expenditures. Okay, 7,000, 20,000 is a expenditures. Income aspect means 7 lakhs 20,000 is a income. But here expenditures method is suppose annual income 7 lakhs 20,000. So expenditures we can classifications out of 7 lakhs 20,000, within that the general expenditures 50 general expenditures 5 lakhs 5 lakhs, and savings means 2 lakhs 20,000. Okay, what I am trying to say that in the aspect of the general expenditures means it is nothing but we are investing the income, investing the land, jewelry. So these are the expenditures. Generally expenditures means what day to day life our using the commodities to spending the money for that particular commodities, you directly spending the money is called for the expenditures, like food, clothing, basic necessities, everything which under category of the grocery items, everything will comes, home appliance, everything will comes under the category of the general expenditures. So remaining 2,20,000, how she spend? So savings in the form of the savings, remaining 2,20,000 in the form of the savings. Savings means you can invest into the gold or land. So whatever it is, you can purchase into some things for your personal of interest. So remaining 2,20,000. So what is that out of 7,20,000? Is getting income is 7,20,000 and expenditures also you can tally into the totally 7,20,000. What is clear? Know that income method means this is the income. Expenditures method also we can calculate into the national income. Expenditures method means the expenditures plus savings. Two categories, summations of 7 lakh out of 20. Also the same amount. So income also same amount, expenditures also same amount. These also another method of the calculations of the national incomes. Same like that, 7,20,000. Here also the 7,20,000. But here what is the point is, here savings in the form of mode given for the importance preference to be invested into the 2,20,000 in the savings and expenditures. We can direct way, you can income also the method of calculations of direct way income method. You another way is expenditures also we can calculate, but the same amount, but classification into two, that's only differ. Remaining everything will be constant. Expenditures mean food, transport, investment, so etc. You can applicable into the wherever possible you can spend the money, also the expenditures. Okay. Next, so here is the very important portions of our Indian economics. Our India following this method, productions method. So production method means it is nothing but generally chances to problems income and expenditures method. Okay. Income method, sometimes what is the real income, sometimes will not hesitate what is the real income. Suppose you are asking the persons what is your income, so they will not replying answer will be accuracy, it's impossible. Accuracy, it's a very doubtable one. Okay. So expenditures method also, how much expenditure, it is very difficult to maintaining of records, everything. So if suppose not in proper record, some difficult, not only agriculture and industry also. So India is basically a developing nations. Most of the peoples are portions of activities for agriculture activities. Some of the farmers also the illiteracy. So they don't, if suppose how much producing this annual years, how much crops are producing. If you going to ask for him, so he will not tell the answers is the right answer. Will telling the answer is it's a very right or wrong. So he will suppose giving the information related for agriculture commodity will not accuracy sometimes, because of they don't know about how to maintaining, how to cultivate, how to manage. These are the things very difficult into the agriculture field aspect. But here also the it can possible, our India developing country, we can possible only through the way of suppose not proper record, some difficult agriculture, sir. But given the information is not in approximately, but near close to our accuracy, then only we are following India is a productions method. Okay. So suppose if you take it one examples, a pen industry using all the factors of productions, producing a pen. Okay. So during a financial year, so various factors are productions are involved in this producing of the pen. For examples, definitely we are using the land. labor, capital, organizations. These are the 4 factors. Organizations are entrepreneurs or businessmen, whatever it is, you can take it anyone. Okay, these are the 4 factors with help we can produce into the a pen industry, a pen. Okay, suppose land. Generally, land about the concept is a generally gift of natures. Okay, so it is a gift of natures. So land. So land we are given the reward for the rent. Okay, we are using the without we can't produce the land. Pen. Okay, pen for per pen. Suppose laborer need, definitely without labor is a indispensable one. It is a part of productions, no doubt about it. Labor also the very essential part of the producing the pen. And capital, without capital we can't produce the pen. Okay, entrepreneurs means remaining 3 factors, the holistically managed, controlled by the entrepreneurs. Entrepreneur means a businessman. Okay, so in the form of, suppose we want to calculations of productions method, we can rent how much this year, how much rent paid, we can calculate it easily. Wage, you need not know that totally income, total expenditures, need not know, but our India following same like that. Suppose a small pen industry producing the pen, these are the with help of these factors, the reward to be given splitted into the four factors. So land received rent, laborer received wage, the capital, suppose entrepreneurs loan from the bank, they definitely will based upon the interest, so pay the interest. Entrepreneurs ultimately what he expenditures and revenue, remainings profit. Okay, just small introduction, small about the numerically presented. Suppose around the total value of 8 lakhs for pen industry producing, the total value of product commodity is 8 lakhs. So within the 8 lakhs you can distribute among the various factors of productions. Okay, 2 lakhs, 3 lakhs, 1 lakhs and 2 lakhs. So you can you need not know about the income, total income, you need not know total expenditures. Within that you can easily calculate into the out of 8 lakhs, within that how much, this how much, this how much, this how much. You collect these informations, you automatically total value of producing commodities easily identifying possible. It is a possible. We are following same like this method. So with the factors of productions, how much reward paid, you can calculate into the maintenance. That's only we can. So I want to share it in this class. Remaining important portion is in the component of productions method. GTP, NNP, GNP. There are the four components are very essential. So must know that. Next class we are discussing related to remaining concept about the productions methods. So today now know that about the concept of, I hope you so understand of the national incomes, what is the national income and what various methods of calculations of national incomes. Income method means income received from how much per year. Expenditures method means how much expenditures to be expenses to various ways, and productions method means our following method is the productions method. Productions method with help of the factors of production, how much there are paid, we can calculate into the 4 factors how much during the financial years we are getting ultimately how much level of value of produced goods. Here I am trying to again, notably I forgot it, what is the matter is that the national income means the finished commodities is the very important. If not, the semi-finished commodity will not calculate into the national income, only for finished before going to market. Okay students, now we are near end of the class. The previous last half an hour we are discussed related for the concept of the national income and what are the methods of measuring of national income. In the continuations of remaining part, what are the component of national income we are see into the later classes. So, thank you for listening and thank you.